We're going to talk today about one of the, I think, cooler categories of data. That's around geolocation. We're going to look at what's happening, what's coming down the pike, and we're going to kick it off first, have RJ give a little background on yourself and about Placer, and we'll get rolling.
Yeah, thanks, Tim, and thanks, everybody. This is a great conference. Enjoy seeing a lot of our clients and customers here, and meeting a lot of new faces here, a lot of people who are interested in geolocation data, and happy to walk you through it. We've got a booth upstairs as well. To give you a little bit of my background, my name is RJ Hottovy. I'm the head of Analytical Research for Placer.ai. I joined the company a year ago after a 20-year history as a sell-side analyst, covering a lot of the consumer names, restaurant, retail, e-commerce, CPG. Over the course of my time as a sell-side analyst, I was always looking for some angle, some way to differentiate myself from my competitors. And in 2018, I learned about a company called Placer, actually as a potential investor, and got a demo. And seeing our data made me equally scared and excited at the same time. On one hand, excited about the potential of this platform and to answer a lot of questions and tell a lot of stories that I wasn't able to tell on a day-to-day basis with just the existing data sets that I had, but also scared that something like this could potentially replace me. So I figured I had to be close to the company, got to know the senior management team, and the stars aligned last year for me to join, and had up a new research group really to show what our data can do. How many of you are familiar with Placer? How many of you have heard of it? Looks like we've got a few people, actually quite a few people. That's great. So what we are, if you don't know what Placer is, we are a location-based analytics company powered by mobile data. Effectively, in simpler terms, that means that we can come up with foot traffic estimates for any physical property in the United States, whether that's an individual retail store, a mall, a chain, a city, or even an intersection. We leverage mobile devices. We have a panel of 30 million different devices that we use right now to generate our data, and that allows us to come up with estimates for foot traffic for any physical location. Really, we got our start with commercial real estate. A lot of the mall owners and operators. I think we have 9 of the 10 top REIT companies that are using us as well. Really started to branch out into corporates now. A lot of retailers are using us, and testing our data too. They've validated our data against what they see at their people counters and their foot traffic. But right now, we're starting to see a lot of interest from financial services companies too. It's an exciting platform, and I think what we're going to talk about a lot today is, it's not just for retail and restaurants and malls. There's a lot of other use cases that you can use for geolocation data.
Yeah, and before we jump into the use cases, and I know maybe half the audience seems like they're familiar with geolocation data. For the other half, can you just give a little background on how you guys are collecting the data? Apps, is it, where are you pulling it from?
Yeah, so we do partner with about 500 different apps. What we do is put a little bit of code into the app and are able to collect data on that device 24/7. The important thing is we get no personal information from that device. There's no way we could reverse engineer and track individual locations. No personal identifiable information whatsoever. Effectively, with those partnerships, and the apps that we partner are a good mix of companies. They're shopping apps, they're lifestyle apps, insurance, financial apps. That allows us to create this panel of 30 million different devices, and from there, that represents about 10% of the U.S. population. So we have ground truth on about 10% of the population. And from there, our data scientists and engineers use algorithms to come up with estimates for that particular property, that chain, and then we can roll up at even the city level. Our data goes back to 2017, so we have a good way of looking at pre-COVID, during COVID, and post-COVID. I think this is great information to have. A lot of ways to keep tabs on what's going on in physical locations, but even much more than that too. I mean, we've really expanded much beyond just a geolocation company and really a marketplace of source, because I think that's where the power of the data comes in, is when you start to see not only what the visitation data says, but then we pair it with census data and says, oh, it seems like you're attracting, your trade area is starting to bring in a wider audience of more affluent customers or a more ethnically diverse group of customers. I think that's where the real power of the geolocation really kicks in.
Yeah, and I think as we've looked back at the whole category in the space, if I thought about geolocation maybe 5 years ago or 7, a lot of the data sets, and part of the issue we always found was a lot of the geolocation companies would come and say, okay, here's 5 terabits of data, here's 5 million pings a day, have at it. How has the space kind of evolved? And, are we to a point now where it's mapped to tickers and it's point and click, or how have you guys seen the space evolve?
Yeah, and it really has. It seems like it evolves every week, really. It's ever changing. But I think really 3 themes have become apparent in the geolocation space, at least in 2022. One, it's gotten crowded, but not necessarily by people who have true, what I consider to be foot traffic data. 2, there's a lot of concern about security and privacy, and that's something that's forefront. Our founders were very adamant about building a platform that met every regulatory, privacy and security regulatory law on the books, and we stay with that. And on top of it, to your point, user-friendly. I mean, I think that's been the biggest thing. I mean, it's one thing to have 5 terabytes of data come into your inbox or feed, but if you can make it really usable, that's where the insights really come. And so I think at Placer, we're really well positioned on each one of those fronts. In terms of the crowded space, we, again, source our data directly from the apps themselves. We're not buying from data brokers. Because of that, the data tends to be pretty accurate, especially when we test with our retail partners. At this point, we're working with probably about 20 of the 25 top largest retailers in the U.S. Even some of the e-commerce companies in that group as well use us for various things as well. And when we look at our data, it tends to be about 93 to 98% accurate with the people counters and the other ways that these retailers track data. So in terms of competition, we feel pretty good that our data is above the rest. In terms of security and compliance, I mean, we've always been an opt-in, with that disclaimer that you do when you download a new app. We always have had an opt-in, and so because of that, the laws that we've seen with Apple and IDFA haven't impacted us that much. We've actually seen our panel size actually grow slightly over the last couple of years. And then in terms of user interface, I mean, I think that's what really sets Placer apart. If you haven't had a chance to take a test drive with our platform, please stop by. I mean, we have the ability to knock out analysis that would take consultants weeks and months. We can do it in days, if not hours. So really user-friendly platform, something that you can really drill down to the property level. You can do it at the chain level, even the industry or even citywide level. A lot of ways to use the data creatively.
How do you see different investment groups using it? So, do you see the systematic guys doing something versus fundamental groups doing another? Like, how does it shift in that?
Yeah, really no straight. It's a really open-ended answer to that question, because we're seeing investors use it, differently among different asset classes, among different investor types. And we're seeing a lot of creativity in it too. A lot of investors finding new ways to harness and leverage the data. I think systematic investors were really the first group that were attracted to us. Not surprising, they seem to tend to gravitate towards alt data pretty quickly there, and they're really using us for the data speed. Our data is on a 3-day lag, so we can tell you what visitation trends were at any store, any location as of end of last week. So they use this because of the speed. They can get a feel for particular trends going on in the retail industry very quickly. We typically are faster than what you would see from credit card providers. Typically it's 4 to 7 day lag. We're at a 3-day lag. So I think that was the first group in terms of just being able to see trends as they almost in real time, near real time. But we're starting to see fundamental investors gravitate to us as well. And what I think it's so different than use case too. And we've had a lot of discussions internally about this. How do we service both the systematic and the fundamental investor? And I think the answer is build a great platform. So what we do in that is we see a lot of people using fundamental investors using us to track changes in consumer behavior. So what did the customer base, and again, pairing our visitation data with census data, census block data, what did our customer look like pre-COVID? What does it look like after COVID? For example, we've been looking at what happened when Kohl's put in Sephora locations. Did that change the base? And we have seen a definitive change. We've seen a younger audience. We've seen a more ethnically diverse audience. We've seen the trade area get wider. So things like that to get ahead of things. And maybe you're not going to make that immediate trade, but you're starting to think about how to position. They also use it at the category level too to make, in terms of portfolio allocation. We start to see them, hey, this is a sector that I want to be in, and this is a sector I should trade out of. More recently too, it's been kind of interesting to hear because we've heard definite examples of the deal makers starting to use our platform as well for due diligence. We are not just looking at public companies, we look at private companies too. So we've had some private equity and venture capital firms that start to use us to really get into due diligence with their platforms, particularly for their investments for the private companies. That's hard to get data. But even investment banks are starting to use our data as well to monitor their different investments. Maybe it's a situation where you put 2 franchisees together. How much overlap is there going to be between the franchisees, stuff like that? We know of an example where that did happen. So we're starting to see more and more creative uses among really the whole spectrum of financial services.
And you have an interesting background because you came from sell-side research. So your goal was probably always, all right, how do I dig into these companies? How do I find some type of differentiation? We did a panel a couple months ago with some director of research heads. I think it was Jeffrey and maybe ISI. And one of the questions I kind of asked him is, I'm just a massive believer in data. And I said, okay, can you make an analyst great if you give them data? And I was kind of shocked because it was supposed to be a softball question. They go, no. And I was like, no, what do you mean? We're a data company, we can't say no. But what he followed up on is he said, look, there's multiple parts to understanding a company and being a great analyst. And one of them was really asking the right questions. And so I'm curious, like, what was your experience when you were kind of exposed to Placer? Was it that you were getting better timely information? Was it looking at the world differently? What kind of drew you to Placer?
Yeah, and to be honest, you've had me thinking about this question all day since you brought it up to me this morning. I think it's a very interesting question. And when I thought about it more, I tend to agree with the other guests that you had. Great data doesn't necessarily make a great analyst. I think it's what the analyst does with that data that really shows the power of that. And what first attracted me to Placer data, was obviously the ability to track the companies that I was publishing on a daily or more routine basis, knowing what's going on between the quarterly calls and being confident in that. We've all tried the drones or store sites, store visits to really get data, but that's so limited in what you can do. And I think almost any analyst in the retail or restaurant consumer sector has made that call. I went out, saw 10 different stores. I saw this trend, but maybe there was something that it was just isolated to one market or something categorically different than what you're seeing across the rest of the country. It really is tough to keep graphs on everything across the country. So that was the first thing, was the ability to do that. But then as I got to thinking about it, this isn't just something I can do for sales. And, because that's very commoditized. There's other ways to do that too. We're competing with credit card data. I think we have a lot of advantages, especially when you look at businesses that don't use credit cards very often. So casinos or fitness clubs or even QSR or, dollar stores, we have an advantage where we can track that on a pretty regular basis and not dependent on credit cards, especially nowadays too, as more and more people are preloading into apps, their funds. We're still gonna be able to track that data. But really what got me thinking is I can track not only just the sales, I can track the whole, basically the whole business as it goes. I can geofence a retailer's fulfillment centers or e-commerce distribution centers and see what's going on there to get a good proxy for what's going on for online sales. When you get comfortable in predicting not only the visitation trends at a store or at a chain level, then you can start to model in all the line items for this company too. You can start to get a better feel for gross margin, particularly if you're starting to see increased demand or increased activity at the manufacturing facilities or the distribution warehouses. You can start to see how that might impact gross margin. Is this something where you're seeing more activity at the centers? I might want to raise my SG&A forecast. So a lot of different things you can do with it. It's kind of gave me the ability to have full insight across the chain. In fact, the first report, I think I was the first analyst on the sell side to publish a report using Placer data. I didn't actually use the retail numbers. I actually took a look at Amazon fulfillment centers, and we'll talk a little bit more about that, I think, later. But it was really interesting to look at ahead of their grocery push and what kind of activity were they seeing at their grocery fulfillment centers. So I think to your question, I think the data itself is nice, but it really comes down to the questions the analysts are asking. A good analyst will use that data to make their calls even better.
Mm-hmm. And how about if we step away from retail for a second, manufacturing, government numbers, what are some of the areas that are the lesser known use cases for geolocation?
Yeah, and that's where a lot of it's been feedback and ideas from our customers themselves. What I think is most interesting is, I think that, this group probably understands that we have pretty good data for retail, retailer sales numbers, visitation trends. It's a pretty good proxy, but what we're finding is some really interesting stuff. I mentioned Amazon, so that's a company that you wouldn't expect necessarily with geolocation and foot traffic data to be a good predictor of anything, but we've been able to map a lot of Amazon's fulfillment centers and just the activity coming in, both the employees and the visitors, the trucks coming into the location. What we found is with our visitation data, we've been able to predict North American third-party and first-party sales combined with a 96% correlation. So that's one example. But manufacturers. So for example, we've looked at Tesla's manufacturing facilities. Seen some really positive correlation on that. We've looked at some of the other manufacturers out there, like a Whirlpool or a Caterpillar. Our data is certainly very useful for that. So it's not just things in the consumer space that you can use for. I mean, ports, for example. That's another example where we can see it. Airports. I mean, everyone's talked about travel this summer being a big theme, and a lot of discretionary spending going over to Europe. My partner Thomas Paulson has been a big proponent in discussing this. But what we're starting to see is that reversion to the norm here. At least as we start to get in the fall, we can look at airport traffic as well.
Yeah, it's been interesting because walking around some of the different data vendors upstairs as well, it's nice to have a whole view of it because you've got the feet on the street and the geolocation aspect. There's the whole intent aspect. And I think we did something recently on a webinar, and it just looked at like forward bookings for travel and just seeing this drop off that's happening. You're like, okay, what's next? I guess, but I think if I were in the audience, I'd want to know is like, okay, what are you picking up now? Like what's kind of interesting? What would you, as in your old analyst hat on, be like, ooh, this is kind of something I'd start looking at for 3Q, 4Q, 2023 type trades?
Yeah, no, in terms of that, I mean, things that we're seeing, I mentioned the airport trade, so maybe the travel trade is maybe playing off a little bit. That might actually end up being a benefit to some of the discretionary retailers, some of the more luxury names that have started to, they tailed off towards the end of summer. Now, where does that go in the back half of the year? So that might be more positive. Off-price has been an interesting one. I know that's a widely followed category, and we've done a lot of work on that space as well. Obviously, that first quarter, the off-price category was hit by a perfect storm, didn't have the inventory.
And that's what TJ Maxx,
okay. Ross stores. And it's important, there's differences between the two in terms of what we've been able to track. I mean, they skew a little bit different audiences and whatnot. So it's something we've been able to look and validate with our data. But as we start to look, they had a really tough first quarter, comps way down. But as you start to look in the back half, and even more importantly to 2023, it seems like people, as we start to see this trade down, particularly among that 70K to 100K customer, starting to trade down not only from kind of the traditional grocery stores, but the dollar stores, but also finding a place. It's still negative year over year, but we're starting to see some turnaround, the inflection point for some of these off-price players as well. So home improvement's an interesting one too. I mean, that's one that's benefited so much from pull forward in demand in 2020 and 2021. It's been hit hard just because of tough comparisons, but at the same time, you look, there's still a lot of demand for the pro type projects at the house. So we're seeing that too, and we've been able to look at weekday versus weekend traffic, kind of the proxy for some of these home improvement chains. Looking pretty good there too. A lot of non-traditional, wear and tear in the house factors that are driving, potential demand for home improvement retail.
Gotcha. And then one quick question, just because every time you hear geolocation, everyone will ask the question, all right, we probably had regulation changes to iOS from Apple.
Yeah.
It's going away next week. What's happening to you guys? Have you seen any of that? Like, what are there things on the horizon that you're worried about, or what's kind of the update on that front?
I mean, it has not really impacted us. Again, we've always been opt-in. The big change with IDFA is opt-out versus opt-in, and we've always been opt-in. With the disclaimer, you download an app. The disclaimer, what it says in the disclaimer is that this data can be used for research purposes. We fall under that. So that's where we've always been opt-in. And so with the changes now that you're required to opt-in, it really has not impacted us because we've always been opt-in. I mean, there is some churn always with our panel, but honestly, we've been pretty consistently at the 31, 32 million in terms of the panel. If anything, I mean, I think we've getting more and more questions from investors about, privacy and security. And honestly, with almost, I think we've got almost 100% success rate with talking with compliance departments about the way we've collected our data. Again, we only collect longitude, latitude, and unique ID that can't be traced back to any other device. We don't work with ad tech companies. You can't use our data to personally go after an individual. You can use it to see what areas are coming from, what zip codes, and better market those, but you can't go after individual consumers with us. And I think when a lot of investors hear that satisfies kind of those concerns about regulatory and compliance.
Cool. And you guys are upstairs, and I know when we were talking before, you were telling me about a new product. So, give me the little scoop, and that way everyone can go running.
Yeah, I mean, we've one of the great things about Placer too is, we've got a great R&D and engineering team, and new products come out every month. I think the one that has been most exciting to me to look at is we've got a great new migration tool that can tell you where people started before the pandemic, where they moved to, the demographics behind that. Is this a situation where you're seeing higher income consumers move out? out of certain markets and relocate. It's really interesting too. I mean, as an example, we've been looking at smaller markets. We saw a big migration away from these urban centers to more suburban, and even cases rural. And we've been hearing a lot of retailers embrace more of a small market strategy, and they talk about, hey, we think we do much better volume, we get better access to labor in these smaller markets. It's absolutely true. I mean, we look at the data for, say, example, Chipotle. We looked at what they're doing in their top 25 markets versus their bottom 25 markets in terms of size. They're doing almost 15% better volumes in the smaller markets. So things like that you can really start to validate and really add some additional due diligence and insight to your models or the way you're approaching investments. So I think it's a fascinating thing, and really I haven't come across a request from an investor that we can't at least start to address with our data somehow.
Mm-hmm. Great. Well, this has been helpful. Once again, if you have any questions for RJ, we'll be upstairs in the data experience at BattleFin, and we hope to see you up there. Thank you.
Thank you.